Hi, the goal here is to create worksheets to quantify personal finance decisions based on long-term projections. So we're going to look at amortization, sample budget, and investments. So let's look at loan amortization. We have the purchase price, loan amount, years, interest, and the starting payment date. So you can do this past dated and see what the numbers look like to determine when this point is. Now here, this green is an input field. So you can see it was reassessed and that put us over the 20%. So we could either take that PMI and make advanced payments or not. And so you can see I generally don't here. Towards the bottom, I have a chart just to graphically show, when the PMI was here, this last 12 are for advanced payments. And so if we go to the top and make a change in any of these, say we put in a random 10K here, you can see that at the top, over the length, it shortens the length of the loan and reduces the total interest paid, and it shows on the chart what's going on there and when, if it happens multiple times, etc. So you can use this for the existing house or put in the purchase price of a new house or the refinance, and then you would have to change the assessed value when that gets assessed in the past, and then maybe try to project a few going forward. So to decide whether you can make those payments, there's a budget. And so what I did here, this is a year at a glance. Each month has 5 or 6 rows here. And so each year I just copy the correct days of the week 12 times. But the numbers are the same, and these auto payment days happen to be the same. And then these bills change seasonally. So here we have daycare, and then summer may go to 0 or just a reduced rate and then goes back up for the school year, or may go down for the school year for one child and up for another, whether they go back to school or not. So here's a shortcut for filling in some of those. You have one of each of these, either biweekly or monthly. You can see the payday here. This is the biweekly one, and then this is the monthly one. And some of the automatic payments, they come out of your bank or your credit card. They may happen on the first Monday or the day after a holiday, for instance here. So that automatic withdrawal wouldn't happen on a holiday. And they may go to your credit card. You don't pay your credit card bill until here anyway. Some of the things are interesting. You may know that you want tires before the snow falls, or you want to see your home insurance or car insurance payments, because those are on a 6-month schedule or annual schedule. And those can be kind of interesting to see, even though they get lost in the bigger numbers. Here's the bigger number, the property taxes. And so you can see this is a plot. This dot right here shows that right before the end of the year. Now, again, these highlighted yellow ones, your initial savings, and these get put onto the year to glance. And then those year to glance numbers get put into these columns and are used for this chart and the chart below. And again, you can see the big dip for property taxes. The car loans show up in a column, just adds the 2 car loans together and brings those down. Now, your debits are on this line. Let's go to December for this example, because it shows our totals. Debits, if they're not automatic, like PMI can be changed to 0, you can see that it recalculates the PMI and shows that total changing over here. And then if I change it back, now numbers in parens are negative. And so you can see that total changed. And then basically you have the state and local tax changes. However, that's a mortgage number. And then the interest is tied into this, and we'll look at that next. And so credits go here, your payday, bonus, and so you can see those numbers change. I have some holidays in there. I have some birthdays, and you can pick whatever day daycare comes out. In reality, as long as it's the negative numbers on this line, it'll go into debits. This number is for tax deductible donations. So you can have the reason above and do that. Then for each month, you may see that you win or lose, and here it's actually an investment that causes this to go negative. And so this is an input number. It's highlighted in yellow. If the tax laws change or the caps change or combines with federal and state, you can change a number here, say negative 15,000. If you get a different house, your tax rates change. You can see that the dot changed here. I can hit Control Z and the dot moves up. This number changes. And so that is that. The giving account, that's just talking about the deductions, grouping them into 1 year because that threshold has been changed to a higher number. So here we have the investments. You can see there's some milestones for colleges and house being paid off, semi-retired, and we have college. And if you invest that money versus paying it, the student has an option to get an interest-free loan for 4 years. What happens and at what rate? And so let's look at the top of this. You put in the year that you want to start, and that can change to, say, 2006. Okay, yes, it did calculate correctly. You have to be careful to slide that over. And then you can see that you have 2007 as your year. Now, how old, were you in 2006? That age is very important. So we added 6 years to it, so we can go to 31 here. And that changes these numbers and the numbers at the top. You can see we have inflation and return on investment that may change over the years. And it changes back to 2001 and our age back to 25. Even if you have a few more zeros, that's fine. So the highlighted and yellow ones are the numbers that you edit, and maybe you did some 1 year and not the next. The reason I changed it back is because I made an edit here for return on investment was not great this year, and then it came back. Inflation may have reduced, and then maybe inflation goes back up. Here we are in 2018. You could probably go 2% here. That affects. Now these are the actual savings that you put in your 401k or Roth. It just shows what happens to those. How much you have on any given year is below. You can see this number grows as those things go along. And so maybe, I know there was a 200,000 number thrown out. And so what I want to do now is for 2018, that number should be, so let's put in a couple of those that we're taking out, and so we have something close to what today's number would be, and then you see what happens over time to that. So we have our house costs, our loan payment, other payments, child care, and so the idea is to forecast the year in such a way, including these dots, so you can go to payroll and tell them that you want 17,000 or 22,000 into your 401k for that year. The goal is to not be too high here. Use the tax incentives as much as possible to come out closer to here, whether that's Roth or 401k or opportunity for other purchases. And you can just add those and what other ongoing costs there might be for that. If there's a lawn service or just other projected costs for school, etc. And so that shows up here with inflation. So these green numbers are just copied down from the top. And these yellow numbers, again, are edited. And you can see this is college, house assessment. So that's showing the value of your house with inflation. Now, I show milk and gas here as comparisons, and you can put in some back years if you want. So you can see that, yeah, you may have this much money at retirement, but how much will that money get you? And so if gas is twice as much and milk is twice as much, but then you may be getting Social Security, so you're planning to withdraw 80,000, you're really getting 104, but really spending like it's 50,000. So yeah, and it depends on these numbers. You're just projecting. You need to know how much what is going to cost in the future. And so this is an opportunity to just add some of those things as a placeholder, something to compare to. And then this top 30 years of contributions into Social Security average. So yeah, you can get this printout of your history. And I put this at the 55-year mark. Now again, if you change your age, these comments are going to change and this is going to change. So there's a sequence maybe that you don't want to change some of the age and year numbers after establishing some of these other numbers, because it'll affect the years, can be significant, because this is when you start looking at what you need to do for the next 10 years for Social Security, to optimize Social Security and retirement. But it's a format to work with. I'm sure we'll find improvements. And with tax changes, I think it's important to have some format for looking at them all at once. Thank you.